right? Like, let's say you and I had a time machine and we went back just 300 years, just 300. Okay. And we were also able to gather up in our time machine the 100 most brilliant people because we have history. We know who they were. We gather the 100 most brilliant people alive on earth at that time. We start asking them questions and we're going to be like, holy shit, man, these guys are really dumb. They don't know anything. Okay, what we can't understand is there's people 300 years ahead of us. And they would come back and they would say, oh my God, they believe that? Are you kidding?
You're thinking of building a company or already run a company that is not registered, but you want to get registered. I've looked at a lot of solutions, and one of the best ones in the market right now is Doula. I reached out to Arjun, who is actually the founder of Doula.com. I asked him if he'd like to work together on the podcast. He was like, of course. Doula is sort of a platform that helps founders and businesses form and manage US companies, regardless of where they live. If someone is living in India, for example, and wants to start a company and get registered in the US, he or she can do it by using Doula.com. Doula helps in forming the company. It can be an LLC, C Corp, or you name it. Doula offers a US address and a bank account to users, which can allow you to conduct business transactions that you can receive and send payments no matter where you live in the world from the United States. And other than that, they also provide tax consultation to the users, which is an incredible feature. And Doula simplifies the process of establishing and managing a US company, and especially for founders that are not in the US. And regardless of where they live, you can get your company registered with Doula.com. To check out Doula, go to doula.com/exerton. That is DOOLA.com/EXERTON. Hey Jim, how you doing? Well,
I'm feeling great. How are you?
I'm trying to well. It's, uh, but I've been looking for this a very long time, and I'm so glad we finally got the chance to do this. Before we get into other stuff that we have to get into, let's start with who is Jim? Who are you?
Yeah, wow. That okay. How what do you want, the short, intermediate, or long take? I'll give you I'll give you the shorter version. So, I for most of my career was involved in asset management. Started a company when I was in my 20s called Shaughnessy Capital Management. Then came up with a very premature, as it turns out, online investment advisor in 1999, 2000 called Netfolio. The idea was that you could customize your portfolios to your specific needs. The tech wasn't really quite there 24 years ago. But we then started a company called O'Shaughnessy Asset Management, where we set out to build that tech many, many years. And then ultimately, O'Shaughnessy Asset Management was acquired by Franklin Templeton for that tech, which allows you to create custom indexes and unique portfolios for your clients. And now I'm the founder and CEO of O'Shaughnessy Ventures, which essentially is doing very different things outside of asset management. It is doing films, it is doing books, it is doing media, it is doing fellowships for brilliant young and not so young minds around the world. So yeah, that's me.
You were you were the first people in in the sort of quant market, so quantitative.
Well, no, no, no. We were probably the first to bring the idea of factor and algorithmic investing, quant, whatever you want to name it, to the retail market. There were several very successful quant funds, but most of them had an institutional bent. Looking
Like Renaissance.
yeah, yeah, Renaissance. There and also there's very different flavors of quantitative investing. So we were looking mostly at long only portfolios. Whereas many like Renaissance, as you named, AQR, others, LSV, which is out of Illinois, um, they took a different approach and went to the institutional markets. And Renaissance, AQR, et cetera, they went more with the hedge fund approach, long short models. So, but yeah, I guess when my book "What Works on Wall Street" came out in the '90s, it was kind of the first of its kind aimed at a broader population than just quantitative investors. At the time, there were a lot of quantitative papers, academic mostly. Uh, but I don't know about you, and I'm a weirdo, so I read a lot of academic papers, but most people don't. And I thought that it would behoove me to kind of roll up my sleeves and say, okay, let's look at every factor that people say they pay attention to when they're investing, right? Back then, you'd ask somebody, why do you like this stock? And you'd hear, well, it's cheap, or they're growing rapidly, or, various explanations that a traditional asset manager would give. And I thought, okay, well, let's see if it works. Let's go and look over as much data as we have access to, and create a very long-term test on the efficacy of various ratios like the PE ratio, price to sales, price to book, or combination thereof. And the reason we felt that that was incredibly valuable was because I don't know about you, but I'm not going to go to a doctor who says, Jim, I don't really even worry. I'm not too worried even about what's wrong with you. I feel really good about these little yellow pills the pharma rep gave me today, and I'm going to have you take those. I'm going to run out the door if he doesn't show me at double blind tests, right? And show me how well it works, how often it works, what's its base rate, what are the worst case scenarios for that particular investment. A lot of people, one of the problems that we have with human OS is we discount heavily the longer term data. And I think that that is incredibly valuable because at the end of the day, human beings price securities. And so I often say, yeah, factor investing is a process, it's disciplined, etc. But really what we're doing is not arguing you should only pay attention to PE ratios, or you should only pay attention to, this. What we're doing is building models that allow us to effectively arbitrage human behavior, because it could be the South Sea trading scandal of Newton's time, or it could be any of the market booms and crashes of our own time. The names change, the companies change, but our human reaction to that remains pretty much the same.
What is the one constant thing that makes the human reaction constant in different places, if that makes sense?
Look, human nature, I think we are primarily emotionally based creatures. We Homo sapiens. And the governing emotions are basically fear and, explore, exploit, but then worry. and and so when you make the understanding that, gosh, the way we're designed, the way evolution designed us, we are not rationality. They are not our governing aspects of human nature, right? And so the literature on it is incredibly extensive. And essentially what you find is everybody, and I include myself here, let's be really clear. I'm running human OS too, so I'm going to make the same mistakes and screw ups as anyone else, absent any guardrails or process to keep me from doing that, right? And so when you look at when does the most selling take place in a bear market? At or near the bottom. People just capitulate, they throw in because, again, emotions are running. Now, people will forever make an emotional decision, and then they will paper it over with rational reasons why they did it. But the rational reasons why they did it come after the emotion. decision, not before, right? So there's just a host of these anomaly studies where like if you look at them, you're just kind of thinking, okay, so maybe we're not terribly rational after all. And again, I include myself. And so I found that, at least for me, the building of a process that I could interrogate, that I could look at, what's the worst case scenario? How long did this particular strategy go down? How much more than the regular market did it go down? How much more than its reference class of portfolio go down? And that is incredibly useful information, right? So base rates are like most people absolutely do not pay attention to base rates. They did a study that illustrates it really nicely. So they took uh, various groups of people and they said, here, you're playing a game and your objective is to win by guessing what somebody is with the highest percentage. And then they were told one thing. They were told there's a town of 100,000 people, 70,000 of them are lawyers, 30,000 are engineers. Okay. So the first round, they simply allowed the person to pick 10 names out of a big barrel of names, but it was just the name Tom, Jim, Ray, whatever, Sally. And what did people do? They went with the odds. They said, well, if my objective is to get the most right, I'm going to say that these 10 are all lawyers because that way I'm going to get 70% right, right? Well, now you see what's coming. The next round, they get to pick the names, but the names have useless descriptive information. Like Tom is 33 years old and well liked. Mary is 42 and likes taking long walks. With the meaningless descriptive information, they started ignoring the odds of the base rates based on whether Mary or Todd feels more like a lawyer or an engineer to them. Then, of course, the clincher, they put stereotypical descriptive information. Frank is 45 years old, wears glasses, likes mathematical puzzles, and blah, 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 right? Everybody ignored the base rate information completely. And even when they jacked it up, to say that, the town is 95,000 lawyers and 5,000 engineers, everyone was like, I don't give a shit. He's an engineer, right? Was because of the stereotypes and labels that live in our head. So, and the other thing about this that's really cool, What Works on Wall Street was on the bestseller list for business and finance for many, many years. And it's all in that book. And I've said it a million times on interviews and whatnot. It does not change people's behavior. So you can have all of the evidence, right, piled up. It can be almost as high as Mount Everest. And people will go, that might be the evidence for all of that stuff. But I know that this guy's an engineer. Welcome to human nature.
Why is it that you are aware that we all are driven by emotions, but you still make decisions not based on rationality?
And those two go pretty well together, right? Emotions equals many times irrationality. Not always,
Yeah.
not always. But listen, there's a reason why we're governed by emotions. You've got to go all the way back to the savannas of Africa when our deep, deep ancestors were living in a very, very dangerous world. And so what did evolution optimize them for? It optimized them for paying really close attention to dangers, especially novel dangers. And you could see this everywhere. Like look at the beginning of the pandemic and why everyone immediately complied with what, a few years earlier would have be seen as draconian lockdowns. Why? Because of our programming, because that's human OS. That's a novel danger. I don't care. I'm going to just comply. I'm going to not ask a lot of questions because again, think about it. Who are we descended from, right? If it's me and you and we're back, however many thousands of years on that savannah and we see a bush rustling, we are the descendants of the people who ran away. We are not the descendants of the people who said, wow, I wonder what's behind that bush. Because the ones who wondered what was behind that bush probably got eaten by a saber-toothed tiger. So as incredible as we humans are, those are our ancestors, and that is what evolution optimized for. And evolution, even if you consider cultural evolution as well, which is outside of the biological long-term process, those are the ancestors that gave us our human OS. So again, just taking very simple advantage of it seemed like a pretty good idea to me.
How do you think does human OS, I mean, I'll steal your term, but how do you think does human OS enhance as you grow older?
As you grow older, that's an interesting question. I think as you grow older and you've seen the same pattern time and time again, that can often lead to wisdom, right? So information is the raw stuff, right? Information unanalyzed, unmanipulated is just information, right? I don't know about you, but I'm not going to spend a lot of time analyzing a list of all of the residents of New York City with their name, telephone number, like an old phone book or a list of that today. So that's information. Knowledge is when you manipulate that information and you find out things like, wow, investing in stocks with the best 1 year gain in earnings actually over long periods of time loses money. I wonder why that is. Right. So that's knowledge. Wisdom is seeing that happen time and time and time again. And that gives you kind of an imbued or saturated intuition of, wow, okay, so the last however many downturns in the market, I witnessed the exact same behavior that shouldn't be behaving that way because they have access to all the information and knowledge I do. And yet when you're older and have lived through a lot of that in real life, maybe your human OS is tempered, not eliminated, but tempered by age and a long history of seeing those same patterns repeating again and again and again.
When you're young, does the wisdom that you get from others, can that be a replacement for the wisdom that you acquire yourself?
Hmm. Um. Well, I when I was young, I hoped that was true. Um. And the challenge is that, again, back to, the repetition of seeing the same pattern time and time again. When you're young, you might have only seen that pattern once or twice. And it's very, very easy to discount things that happened in the past. We also have this weird bug in human OS, human nature, that basically says, well, that might have been true of all those people back then up through history, but that's not true of us. We we uh, we are different, and we're not. And so the other challenge is it's you really have to have a certain frame of mind to be able to go kind of all in on something that you have not personally experienced. Another part of a human OS, right? And so we what happens is in the full-blooded world of now, of reality, that's when all those emotions, by the way, are most active, right? And during the great financial crisis, I saw people who had been partners of ours, clients of ours for more than a decade fold. They had personally experienced it. They had personally experienced everything, and yet they just buckled under the weight of that incredible fear and said, "Yeah, no, not gonna do that anymore. I know you might even be right. I don't care. I'm terrified. My clients are terrified. So, we're heading out for the hills here. So, I think that, there's a great Douglas Adams quote, which is one of the weirdest things in the world that I've ever seen is that humans who are almost designed by nature with the ability to learn from others are so incredibly disinclined to use. And yet, a great quote because it's true.
How do you develop the intuition to know when to go all in versus when to not?
So, for me, again, I had the process and the numbers guiding me of, empirical, quantitative, algorithmic style of investing. So, for example, I wrote in March of 2009, which was near the bottom. I didn't know that, by the way, at the time. Near the bottom of the bear market of the great financial crisis, which began in 2006, 2007. And I wrote a piece called A Generational Buying Opportunity. Now, did I write that piece because of my intuition? No, actually, I didn't. I wrote it because of what the numbers were telling me. I looked at what had happened, all of the carnage and destruction, and I was like, all right, well, let's look at the 50 worst 10-year periods in the US market history, right? And what did we notice? We noticed that following these 50 worst 10-year periods, of which the 10 years ending February of 2009 was the second worst, right? On a real basis. All of the other ones for which we had forward 1, 3, 5, 7, and 10-year data, once you got to 3 years, all of the numbers were positive. All of them. And we coupled that with, bonds normally don't outperform stocks over really long periods of time. And in that mix of that time period, bonds had in fact, long-term bonds, had in fact beaten stocks over a 30 and a 40-year period. Highly, highly, highly anomalous. It had only happened 2 times prior, and that was in 1941 and 1942. And so the numbers were suggesting to me, they were literally screaming at me, listen, you coward, back up the truck, start buying US equities. And back to human OS, right? I published that in March of '09, not because of any insight that I as an individual had, because of what the numbers were telling me. And guess what the reaction was? You are a lunatic. You are crazy. You are a mad Irishman out in the midday sun. You're never that like you. This is the craziest thing I ever saw. And it works on both sides. I published, and this is also a great example of the power of human nature, human OS. I published a piece in April of 1999 during the dot-com bubble saying, and the title of the piece was The Internet Contrarian. Again, not because I was an internet contrarian. I'm an early adapter. I love all things new. I use them way ahead of many of my contemporaries. And so it wasn't that I didn't love the internet. I did love it. But we looked at the numbers again and we were like, uh-oh. The numbers had suggested to us that those kind of valuation extremes always led to horrible outcomes. And so I published a piece basically saying, even if we only looked at companies that I think will survive, and I named Amazon as one of those companies, I said, I think that I'll be able to buy it like 90% lower in price after the crash in all of these names. And man, the hate mail I got. We're here on Human OS, right? At the time, I was 39 years old, and everyone was like, "Man, you sound like one of those old guys. Like you're young. I can't believe that you are going in on saying that this is a bubble and it's going to break." But here's the human nature part. What did I do in the fall of 1999? I started an internet company. So the only reason I was allowed to make that happen was it wasn't covered by my investment process in public companies. But that is the pull. That is the pull, and the pull of bubbles matches, maybe exceeds the fear of crashes, right? Like you look around and things that, all of your training, all of your numbers, everything say this shouldn't be working. But if it just keeps persisting, you're like, I got to get me some of them sweet, sweet internet profits. And now now we're hearing it about AI, we're hearing it about other things as well. Now, I don't think we're anywhere close to where we were in the .com era with things going on today, but it'll happen again. That's the other thing. The cyclic nature of markets just keep. Yeah, if you want, you can go and look at a very long history of markets, and it doesn't have to be just the U.S. Markets everywhere. And unless there's like a revolution, like happened in Russia or China, and by forces that are not looking kindly on free market activity, like the Bolsheviks in Russia, virtually every stock market, with varying degrees in terms of total return, has done well over long periods of time. Of course, there are exceptions, but the majority of them demonstrate this type of pattern behavior. There's a great book called, it's expensive, but it's called Triumph of the Optimists. And it looks at stock, bond, cash returns in all countries that have markets uh, since 1900. And so it's not like all of these books and literature aren't out there. They are. Again, doesn't matter. Human OS gets to trumpet almost every single time.
Oh, this question, I've this question has been on my mind for like, I don't know, 6 months now, and I've not received a good enough answer as I know. But you talk about human OS there, and like everyone has it. Would you say people are more similar to each other or more different than each other?
I think people are, that's a great question. I think that people are much more similar to one another than they are different from one another. And you see worldwide, particularly in the Western countries, America, Western Europe, etc., you see political people trying to turn people against one another and trying to highlight people by their negligible differences as opposed to their many similarities, right? And when that happens, you get the kind of results that you're seeing now, right? You get intolerance, you get the othering of people that aren't in your in group, you get all sorts of externalities that are very bad. And yet, again, because it's emotions at work here, right? You get highly motivated people to, if you're a politician, to vote for you, or if you're a business, to use your product. And so I think it's one of the unfortunate models that really arbitrage negatively human behavior, because our similarities are so much more than our differences.
What would you say the similarities are?
I think that if you look at humans anywhere,
Hmm.
there is a strong affinity by both men and women for their family, for kin. And there is also a strong element of deep love bonds with those people. And that extends to close friends, close relatives, etc. And as it go out in waves, it reaches a tipping point where, yeah, you don't care so much about those people who live in that country over there. And you also have in people, again, from our evolutionary past, if you're in a hunter gatherer tribe, what is the first thing you're going to want to do? the first thing you're going to want to do is fit in, right? Because if you are in that tribe and you don't fit in, they're going to exile you. And back then, exile basically meant death because humans are much better in groups, cooperating with one another, coordinating with one another than they are as a single player. So there's a great quote there as well. Drop a single human of any race, any sex, etc., in a forest with creepy crawlies and scary animals, and you've given those scary animals a delicious meal. Drop 100 humans in that same forest, and you have created the new apex predator in that forest. Because humans, the thing that distinguishes us, despite, are these guys, but also our ability to coordinate and cooperate with one another. So you're in that hunter gatherer tribe. What are you going to do? You want to fit in because you don't want to be severed from the tribe. Now, what does that mean? Fit in. What does that create? Does that create high people with super high agency? Not really. It creates people who are willing to go along with what seems to be the sense of your tribe, even if they personally don't agree with it, right? So that's why opinions, that's why what people do are essentially pretty easy to manipulate if they're still in the I want to fit in mode. Now, what's the next thing you want to do if you have already fit into that tribe? You want to stand out. You want to climb that tribe's hierarchy. And so let's say you're a hunter, you want to be the best hunter. Or if you're a gatherer, you want to be the best gatherer. And so it's that, very interesting push pull. I want to fit in. I want all my tribe mates to like me and not hate me and not want to execute me or exile me. But I also want, to be the top of the tribe hierarchy. And I want to be the best hunter, the best gatherer. So it's that push and pull that I think is absolutely uh, part of all human behavior, regardless of where you're born, regardless of where you grow up, etc., regardless even of like your religious affiliations, etc. And so I think that another part of human nature that is the one we're taking advantage of, right, is that we seem programmed to believe that everything that we know now is all there is to know. And the like David Deutsch in his book The Beginning of Infinity has a great book, great book, but also just like great quote. He's like, "Hey, what were people thinking or talking about quantum physics and the internet in 1900?" They weren't, because nobody knew about quantum physics or the internet in 1900. And yet it is the most repeatable aspect of human nature to believe that, well, all of those other people from history believed that and were wrong. My beliefs, my, I have the real take on human nature. And that just happens again, and just ad infinitum. So those would be some of the similarities that unite us all.
We don't know what we don't know.
And it is very hard for any human to admit that. Like, there's so much I don't know, and I'm often wrong. And that's the other thing. People hate to be wrong, right? Listen, failure is a ladder, and it leads to, if you use it the right way, you're going to fail. You're going to learn, hopefully, because your failure was hopefully a new mistake that you haven't been able to read about. And then as you climb that ladder, guess what? You fail, but you fail better, and you learn from that as well. But what is one of the things other than public speaking that most people are terrified of? For other people to see them fail. And so, especially, and this gets back to your question about youth versus older people. Like, when you're young, That is such a strong thing, right? And what you don't realize as a younger person is that, you know what? Other people really aren't thinking about you at all. They're thinking about themselves, and they're worried about the same thing you're worried about, right? So you're in a room and nobody wants to be the first to say, like, I don't get it, or I don't understand, I don't know. Learning how to say I don't know is possibly the best advice I could give any young person today. And if you wanna be highly agentic, then say, "I don't know, but I'll find out." And this inability for people to admit that they don't know is just very puzzling to me because, like, there's so much that we don't know, and there's so much that I mean, right? Like, let's say you and I had a time machine, and we went back just 300 years, just 300, okay? And we were also able to gather up in our time machine the 100 most brilliant people because we have history. We know who they were. We gather the 100 most brilliant people alive on Earth at that time. We start asking them questions, and we're gonna be like, "Holy shit, man, these guys are really dumb. They don't know anything." Okay, what we can't understand is there's people 300 years ahead of us, and they would come back and they would say, "Oh my god, they believe that? Are you kidding?" Right? And so you've got to be have a certain sense of humility. And by the way, I when somebody says like, "Oh, that person has a really big ego," I think that if you translate that in your head to remove the word big and insert the word fragile, fragile ego. People who have fragile egos don't want anyone to ever question them. They're always right. Like it's my way or the highway. And they have very little understanding that what they're doing is simply taking a perception of theirs, turning it into an opinion, then making that opinion part of their personality. And so,
Yeah.
ipso facto, anybody who attacks that opinion is attacking them, and then they get angry and they go after that. I mean, look at social media for Christ's sake. That's the that's what it is, right? You're an idiot. No, I'm not. I know this. I'll die on this hill. And I always say I'd rather just, embrace the General George S. Patton rule of let the other poor dumb bastard die on his hill for an unsupported opinion. You've got to let again, this is part of that growing up process, right? Well,
Yeah.
as I was coming up in the asset management industry, I got punched in the face continually by the market. Like, you're an idiot. Bam. Oh, okay. I should have done that. You're an idiot. Oh, that really hurts. And when that happens, there are old investors and bold investors, but there are very few old, bold investors. And so you get tempered by experience, by having to deal with being wrong. And you've just got to be absolutely comfortable with that. And very, very few people are. Again, that's an edge on arbitrating,
Yeah.
or arbitraging human behavior.
This is more of a philosophical question rather than an advice, I'd say. But what do you think where do you think is the line between not caring what people think and caring what people think that all humans share?
Well, I think you can go back to when you asked me about what are the commonalities of human nature, right? So I think if you draw a circle around your immediate family, your parents, your children, your grandchildren, you do care what they think because you love them,
Yeah.
and they are part of, your family. So in those instances, it makes a lot of sense to care and worry about what they think about you. I think that again, we are so young, us people living in 2024. And by that I mean, if you just go back to, I don't know, 1870, people were using the same sort of transportation methods that the Romans used, right? Nothing had changed. culture was local, and we were separated by geography, space, and time. And so back then, there was a monoculture within your particular place where you lived. And you probably would want to comply with it because you wouldn't want to be seen like, what happened? Look at history. What were people who didn't care what other people think and advance new ideas? They were heretics. They were apostates. And generally, they got burned at the stake or drawn and quartered or hung or had their heads chopped off. And like, hey, that was not such a great. But then that all changed, right? It all changed when suddenly we had mass media.
Yeah.
That was the biggest experiment in human history, right? In human history. The guy who announced on the radio when Charles Lindbergh, who made the first transatlantic flight to France, came back, the guy announcing it on the radio was talking to more humans than any other human had ever done in history. And so, and I say it's an experiment because when you have that kind of access, that one to many, guess what's easy to do? It's really easy to get people thinking about the same thing and basically create that particular kind of mass media culture. And then so we supersized everything, right? Like here we are. I'm talking to you in Delhi and I'm in Connecticut and I can call you or I can do this with you. And so like if this were the lifespan of a human, everyone today in 2024 is an infant just learning how to crawl with all of these new technologies, right? Most of human history was spent absent all of the what I would call marvels and wonders of our world, right? But we're still new at it. And does that mean, I don't know, 1,000 years from now, will we have evolved to better take advantage of things that are so new to us now? I hope so. But I think that long drag of evolution with its need for variation, its need for experimentation, etc. We're just at the beginning phases of that with all of the new technology we have.
You talk about media there. What do you think, uh, like even in the past too, or I'd say in the moment too, how do you think has past media, like from 90s, like even before that, I'd say, how has that shaped the world we sort of live in today? 2024.
Well, I think what you're seeing with traditional media is the biggest temper tantrum that has ever been had by an industry. Because in the old days, at least in the United States, there were 3 TV networks and 2 newspapers that mattered, right? So the 3 networks had the power to shape the way people thought in a manner that had never been seen before, back to where infants crawling, right?
Yep.
And so the newspapers would be the New York Times and the Wall Street Journal in the United States. And that kind of ability to essentially control the content going into people's minds created a situation where everybody was kind of thinking the same thing at the same time until the bigger story changed. And guess who decided when the bigger story was going to change? Those 3 networks and those 2 newspapers. And that has been atomized. And traditional media is absolutely livid and angry that they no longer have the almost monopoly on people's attention. And so what happened? No matter what political party or political ideology you believe in, they basically bifurcated and went away from essentially like the Times, all the news that's fit to print, right? They moved from that to all the news that fits our narrative and our view. But so did all the conservative newspapers, right? Like, so it's not like it was just one side that did that. Both sides did it. And what is it reminiscent of? The way it was during the American Revolution. During the American Revolution, the newspapers were essentially written by the political ideologies of the varying sides of the question of the way to set up a new country. So, you had the Federalists over here, you had the Democrats over here, and they battled it out, except it was in print and it was in pamphlets. And so it lacked the immediacy of what we're seeing today. So I definitely think that as new media emerges, you're going to see a lot of things that many people just can't figure out happening. By that I mean, I saw the other day that there's some kid on TikTok who his deal on TikTok is he just reads the news, right? But that kid has more subscribers. I think it was 3 million. I'm not on TikTok, so I don't know. But
Yeah, neither.
I think, yeah, it is 3 million, which is greater than the circulation of the New York Times, the Wall Street Journal, and one of the major networks on TV. And so the ability to control the Uber narrative is collapsing. And what happens when that happens? People start with conspiracy theories, and like they lose trust in these institutions that it took hundreds of years to build up. And that's creative destruction, as Schumpeter would say, and it's happening now.
I think how it worked was like in like many years ago, each town or each city had its own publication which worked there, and slowly the larger ones came out, like the three largest ones that you talked about, and like when they started losing their monopoly, I think internet was the nail in the coffin. It like democratized media completely. Do you think is that one of the reasons?
I think that what you're seeing is a shift from, well, back to why did Franklin Templeton buy OSAP? Uh, we're seeing a shift between where we've been, which is a world, an industrial society that mass produce things, right? So we had mass media, we had mass products, we had mass services. And if you look at a normally distributed bell curve, 68.5% are within that sweet middle. And so
Yep.
everyone produced content, produced products for that huge center distribution under a normal bell curve. Well, now we've moved to a Mandelbrot distribution, in my opinion, which is much more fractal. So the middle is much peakier, and
Yeah.
the tails are much longer. And
Yeah.
I think that there is an amazing opportunity, an asymmetric opportunity in those tails. And people have a very hard time adjusting their playbooks or their models for what worked for them for decades, right? And suddenly it's not working anymore. And so, well, we'll double down. We'll try harder. We'll do this, and that. Well, no, because you're operating in a different environment, and that model doesn't work anymore, right? And so you have to, if you want to stay a step ahead of the game, you've got to understand, gosh, that model that I loved and worked so well for me for 20 years doesn't work anymore. I need to update my thinking. I need to unlearn things and learn new things. And people are very disinclined to do that because of the habituation of the way you look at the world.
I think this has been incredible. I like learned a lot from this one and got some ideas off my head too. One question which I'd like to end with. I've been into startups, VCs, all these things that like 11. What do you think is one fact that will blow 11-year-old me's mind?
To blow an 11-year-old's mind. Wow. Okay, so I have a grandson who is turning 11, and I really wish he was here because I would just turn to him and I'd say, Pierce, what blows your mind today? You know, I honestly, honestly don't know, right? It's like that's the beauty of youth. We talked about some of the downsides, right?
Yeah.
With the, fear of being seen as a failure, desire to fit in. But youthful minds are far, at least as I've experienced them, far more open to checking out like what's really new and different, what's really cool. And so I would reverse that question and I would say, like, if I could put an 11-year-old, I could probably convince my grandson to give me the skinny on what he thinks is the coolest new thing. But the beauty of younger minds is they aren't conditioned like the older minds. We just spent an hour talking about how we're all conditioned, right? And they're not yet conditioned, and they see things that I don't. So I guess I'd ask them, blow my mind, please.
I learned a lot from this, and I think that's it. My same thing you'd like to say?
Just thanks for having me on, and I wish you the absolute best on your adventure as you explore a career in podcasting.